Hello, this is Greg Michaelowski. I'm with FXDD, and this is a Forex commentary for FXStreet.com. It is Tuesday, July 13th, and Tuesday is moving day for the Forex. You typically get over the Monday, doldrums or the Monday range type trading, and you work into Tuesday, and we'll see what the market does here today. So I thought I'd take a look at some of the major currency pairs and give you the key technical levels to watch here today, because there are some in these currency pairs. Let's start with the euro versus US dollar. And what I see from a technical perspective here is a couple things. One, this 125.87 level. Look, we have lows here, we had low here, low here. We broke through the level and then used it as a resistance in here, and then we used it as support again right here when the market started to move back up to the upside. Broke through the downside here today, broke through this green line 200-hour moving average on our way down and then our way up. We broke back through that 200-hour moving average, and this corrective move to the upside. Stay below the 126 level, another key level for me in this in the euro versus US dollar, but could not muster much momentum above the 87 level. You can see here the market could not close above that 87 level, so the market started to come down back down. And where did we come to 125.71, again the 200-hour moving average. So right now the market is tied between or it's confused and doesn't know which way it wants to go. Does it want to go higher above the 125.87 level? In which case, if it does, I think this time we're going to have a further break to the upside with perhaps a test of this blue line. That's a 100-hour moving average currently coming in around the 126, 28, 29 type area. Or is the market going to break this 125.71 level and start its move to the downside, pausing at 48 on its way down toward the lows for the day? Another test of the lows for the day. That's the decision the market, I think, has to make here from a technical perspective. With the current price trading at 77, it's still in that limbo land here and trying to figure out which way it wants to go. Ironically, look at the 5-minute chart here, and you can see this how the importance of the 87 level here on the top side. I have a horizontal line in going across that level. Also on the bottom side, where's the 100-bar moving average in the 5-minute chart? Just below that 71 level, 125.70. You can see how the market's tested it twice and tested the top side here. You can see how the market is really confused. It's ready to make a decision. Which way is it going to go? That's why we have moving days here. Today's a moving day in the euro versus US dollar. Let's look for a break either to the upside or break to the downside and look for that momentum on the break. Let's go to the sterling versus US dollar and take a look at that chart. And what we see here, the key level here that I'm going to be paying attention to is again our moving average lines. This blue and this green line. Blue and the green lines represent the 100 and the 200-hour moving average in this chart. The blue line is the 100-hour moving average that comes in at 151.04. The green line is a 200-hour moving average, comes in at 151.17. We've gone up and tested the 200-hour moving average, have not been able to confirm the move through the 100-hour moving average to the upside. That has failed. So as a result, we've seen the market retrace a little bit and come back down. Now on the downside, we have good support here at the 150.75 level. What's the significance of that? Well, 1, 2, 3, 4, 5, 6 times, and now 7 times, the market has come down to this area right here and found either support or resistance. The last time the market found its support against that level, trading down to 68, moving back sharply to the upside here to test the 200 and 100-hour moving average. So right now it looks like the market is more content to move back within this trading range of the sterling versus US dollar, but we're going to need to see a move through the 100 and the 200 bar moving average. If we don't get this move, folks, then guess what? The bias is the bullish bias ends, and we start to go, and we probably go and test the 150.75 level, get through that level, and we're starting to move down again. So again, we are at key levels here for the sterling versus US dollar. And right now, it's looking like it's having its congestion problems up here against the 100 and 200-hour moving average. But keep those levels in mind. Traders can sell against the 200-hour break above the 200-hour moving average if they're so inclined to do that, or they can wait for a break of the 200-hour moving moving average, in which case we could see a move through the 27 level and then 64 level, which was an old, again, another one of these remembered lines where we had low, low, we had lows, we had highs, we had lows, we had highs. In this area right here, we should find some resistance. In addition to that, we have resistance against the undersign of this trend line, which we broke. That comes in at 152.02. That's the sterling versus US dollar. It's moving day. Keep track of this key levels. Let's go to the dollar versus yen. And what I see in the dollar versus yen is that the market came down, continued the corrective move to the downside after this this move back up to the upside here that we saw on starting July 7th, 8th, 9th, and then Monday of today's trading. Since that peak on Monday, the market has been moving back to the downside with the yen getting stronger here. And what we did break through is the 100-hour moving average at 88.35. As long as the price can remain below 88.35, this blue line in the chart, we should see the price moving down toward the 200-hour moving average that currently comes in at 88.04. So right now, from a trading perspective, look for the market to stay below that 100-hour moving average and move back down toward the green line. If we move back above the 100-hour moving average, I expect that the market be disappointed in this move to the downside, and we start a move back up to the upside, first stopping at 49 and then working our way toward the 88.68 level and this 88.91 level, additional resistance up at the top side for the dollar versus yen. If we are able to stay below this level, again, we're going to look for the move down toward the 200-hour moving average, down toward 87.82. That would be the 61.8% retracement of this move to the upside for the dollar versus yen. Let's finally go to the dollar versus Swiss. And the dollar versus Swiss has a key level here at the 200-hour moving average. The market has been correcting above this channel. Yesterday we moved sharply higher, went up to this 106.75 high. That also corresponded with this high right here. Found some resistance against that level and started to move back down. Got below the 200-hour moving average, but came back down to the underside of this trend line here in the first couple hours of trading, but bounced back higher. Now the market has key support at the 106 level, currently trading at 106.05. This is a key level for the dollar versus Swiss. If this level holds, look for a further move to the upside for this currency pair. And if the level breaks, look for a move back down, perhaps back down, testing this bottom side of this trend line and this 100-hour moving average. That's the blue line in this chart that comes in at 105.62. That would be our target on the downside. A break of that level leads to lower levels, even lower levels for the dollar versus Swiss. That is, if it can break this green line. If it can't, then we should see some momentum to the upside develop with 106.75 as a target level for the dollar versus Swiss. Let's take a look at the Canada. Because this has a key level in the 100-day moving average at 102.96. That's this blue line in the chart. If the market should break through that level, then the continuation of the trend will a trend to the downside will restart, and we should see further pressure down to the 102.05 level. That's a key level for me in the currency pair. If you go back in time, you take a look at this low going back to October 15th. What was the low? 102.05. That's going to be my target level on a break of this 100-day moving average. So there you have it. So Tuesday is moving day. Be aware. Be prepared. Some key levels in some of these charts. This is Greg Michalowski with the Forex commentary for FX.